Hey traders, welcome back to the weekly Forex Forecast. Last week was a big week because we had the Bank of England, we had the Federal Reserve, and we had the Bank of Japan, all with interest rate decisions. And we saw the Federal Reserve cutting 50 basis points when the consensus from economists was 25 basis points. This does put US dollar shorts on the table, and this has actually near term brought some risk on back into markets. So US dollar shorts are one of the top things I'm going to be looking for this week. And I'm going to show you the other setups I'm going to be focused on trading next week, including the Australian dollar pairs, where we have an Australian interest rate decision next week. And I'm going to show you exactly how I plan to trade around that news event next week. Okay, so if we move on to the portfolio selection, one of the first things you can see is that the Japanese yen has now peaked in terms of its performance metrics. And this does suggest that the yen is now going into either a bigger correction or a reversal. I would suggest, with the fundamentals and the Bank of Japan looking to hike rates again soon, and the Federal Reserve cutting rates, which feeds through into strength for the yen, I would suggest that we're probably looking at a bigger correction, and the yen strength will continue to the upside in the next few weeks. If I click into the Japanese yen itself, you can see that we are becoming, or we were becoming, a little bit stretched on the weekly time horizon. And so this peaking from the top, which again is consistent with a bigger correction or reversal, in this case I think a bigger correction, is exactly what we saw, but the opposite back here on the 11th of July. Now on the 11th of July, the hedge dash algorithm showed a very, very weak yen troughing and increasing its performance metrics for the first time, and that kicked off the big rally. And I reported this a couple of days later in the weekly Forex forecast of the 15th of July. So moving on to the portfolio selection, the first thing to jump out at me is the Japanese yen off the bottom. This has been rock bottom of the performance metrics, and we've seen a jump, a troughing of the performance metrics of the yen. And this was because we had the soft CPI data come out. As soon as we get that, we get money coming out of the US dollar into the Japanese yen. And it also looks like at the same time, the Ministry of Finance in Japan used that soft CPI print to intervene in the yen. And we may now be looking at the actual reversal coming into the yen. So you can see we've had a very good run in the yen. I did actually buy some yen last week, didn't work out for me. But coming into this week, I think we probably need a little bit more of a pullback in the Japanese yen. So we're not going to be looking at yen pairs this week, but in following weeks, I think yen strength will be a good theme once again. So going back to look at the scores themselves, you can see really the currencies to the downside are the ones that I want to be focused on. And we have the Canadian dollar as the best short, the US dollar as the second best short, and the New Zealand dollar as the third best short. So I'm going to be looking at those three currencies to the downside in that order. To the upside, it's a little bit more tricky this week with portfolio selection. The number one spot is obvious. The pound, this is absolutely at the top of the performance metrics. So quantitatively, we should be looking at pound strength versus the CAD, the New Zealand dollar, and also the US dollar. So I'm going to be looking at pound CAD, pound dollar, and pound New Zealand in today's video and also next week. Now, the second thing is, if we're going to get US dollar weakness, I would expect the euro to actually perform quite well because of that, because the euro makes up 57% of the dollar index. So by definition, if we get further weakness in the dollar, which looks fairly likely next week, the euro should be a beneficiary of that. We've already discussed that the yen is a little bit too overextended. Now it's starting to reverse. Looks like it needs a little bit of time to reverse a bit more, correct and settle. So that really only leaves either the Swiss franc or the Australian dollar as the third currency to the long side that we can look at. Now you would think, okay, the Swiss franc, is bullish and the Aussie is bearish, but the Swiss franc is moving this way, suggesting it can turn negative in terms of its performance metrics, and the Aussie is moving this way. Now next week, we also have an interest rate decision out of Switzerland, and they're expected to cut interest rates. We have, as I already said earlier on in the video, an interest rate decision out of Australia, and Australia are expected to hold interest rates. So the fact that Australia has the momentum to the upside, even though in absolute terms it's currently more negative in the performance metrics than the franc, I do actually favor Aussie strength next week because, of course, we have that quantitatively, but also if they're going to hold interest rates, this, of course, is more supportive of the Aussie than cutting interest rates like the Swiss National Bank are expected to do next week. So we're going to be looking at the pound to the long side against these three. We'll also look at EuroCAD, Euro Dollar, Euro New Zealand. And finally, we are also going to look at Aussie CAD to the upside, Aussie Dollar to the upside, and Aussie New Zealand to the upside for next week. Okay, so kicking off the watch list as we do every single week with crude oil. Now, crude oil is actually the top short in the commodity section of the Hedge-Analytics platform. And so this is definitely a market that is in play next week. As you can currently see, because of course markets don't move in a straight line, you can see we're correcting, we're consolidating, very, very choppy. We're above the 30-period moving average. So I can only short this or do nothing. I cannot buy this next week. What I would like to see is I'd like to see this pullback, breach the 73.99. Once we're above 73.99, we're essentially in the sell zone, where the odds of a reversal go up substantially intra-week. And so if we breach the 73.99, I'm going to be looking at a 1 or 2 day reversal to the downside in crude oil. If we break through here, like we did with the yen pairs last week, and we end up at the second upper bound, whether I'm already short or not, so whether I have a short from here and it pushes through and I'm on the losing side of it and I'm cost averaging it from here, or whether I'm not involved in a position and it pushes through, test the second upper bound, we become extremely overbought intra-week, and this would be the second place I'll be looking for a 1 or 2 day reversal to the downside in crude oil. That is the kind of setup that I'm looking at and trading in real time with GMT members every single day. Now, the third thing you can look at is this. If we start to push up to the 73.99, but before we take it out, you see crude oil sell off back down below its moving average with momentum, you can look for that kind of bear flag pattern. It sells off, it pulls back, kind of tucks into the moving average. You see it does it there, sells off again here. And you can look for that bear flag setup into the target to the downside at the 68.24. Once you trade below this, you actually become oversold intra-week. So it's a very good profit-taking opportunity for any intra-week shorts in crude oil. Okay, so kicking off the Forex pairs with the pound pairs and starting with pound CAD, you can see we are trending nicely to the upside. What I'd like to see is I'd like to see this pull back and test the 1.79480. If we breach the 1.79480, we become oversold intra-week. And once we enter this kind of buy zone between these two levels, this is where I'm going to start to look for potential reversal patterns. Sometimes it tests quite deeply, and then you start to get the snapback for 1 or 2 days. The second thing is, if for whatever reason we break through here, although it's unexpected, it does happen. If we break through here and we come all the way down to the second lower bound, whether I'm already long or not, I would be looking for a potential opportunity to the upside in pound CAD for 1 or 2 day reversal. That's what I'm trying to capture, is 1 or 2 days out of 5 essentially in any of these pairs. And so very often, if we make our way down to the gold level here, usually, especially in some of the stronger markets, I'm already long and it's working against me and I'm just cost averaging it. Now, the third thing you can look for is this just might consolidate. You see the moving average catch up to it. It might consolidate, starts to break down below its moving average, and then you get the same thing. It doesn't make its way all the way down. It starts to break back above, and you get it kind of break above and just kind of tuck in to the moving average and then rally. And you can look for that kind of bull flag setup if you get that. So it breaks down, it consolidates. You get this flag, but it doesn't turn oversold. And because it's a strong market or a fast market, it starts to break out. You can look for that bull flag setup. Usually you only get one in the 4 hours each week into the 1.82147. Above here, you become overbought intra-week, so it's a good profit-taking opportunity in pound CAD. Next is pound dollar. Now, don't forget, we had the Bank of England last week, and they held interest rates. So this is supportive versus other currencies where we're starting to see cuts, like out of Europe, out of the US, and also even potentially this week out of Switzerland. So any pullback in pound dollar, what I'd really like to see, I would like to see this market turning oversold intra-week below the 1.3202. If we do that, I'm going to be looking for a 1 or 2 day reversal, going to be looking for reversal patterns on lower time frames for a 1 or 2 day reversal to the upside. If for whatever reason we break this and we end up coming all the way down to the bottom of this kind of buy zone at the 1.30847, this would be the second place below here. I'd be looking for a reversal to the upside. So the gold level here is the 1.30847. I'll probably already be long. If we do get down here, I'm looking to cost average it. But it's not expected. Rarely do these markets usually need a catalyst. Like last week, we saw it with the yen pairs, but we had the BOJ, we had the Fed. So coming into this week, the third thing you can look for is if we start to break back down below the moving average, and then you get the cross back over it, you can look for that bull flag setup into, because what that means is it means you've corrected and then you've broken out. You can look for the bull flag setup into the 1.3437, where we become overbought intra-week. So a great profit-taking opportunity for any intra-week longs. Okay, so the third pound pair we're going to look at is pound New Zealand. Now, it's already chopping around and consolidating. So what I'd like to see is, I'd like to see it come back down early on in the week, take out this low, breach the 2.1156, and this is where we become oversold intra-week. I would be looking for a 1 or 2 day reversal to the upside below this level. If, although it's unexpected, doesn't happen very often, it does happen if we break through here and we test the gold level all the way through this kind of buy zone into the 2.0954. If we breach the 2.0954, this is the second place next week. Whether I'm long from here and risk managing this, or just with an initial position because I might not be long here, I might have just missed this trade and then it starts to make its way and test this level. This would be the second place below the 2.0954. I'd be looking for a long position in pound New Zealand next week. And again, if we start to break down, you can look for that breach back above the moving average intra-week. You start to see some momentum coming in. The moving average turns up and then it just kind of hugs the moving average. You can look for that bull flag setup into the 2.1560 where you become overbought intra-week. Great profit taking opportunity. Okay, so kicking off the euro pairs with EURCAD. Now EURCAD is already consolidating into its moving average, so it may start to break out. But what I'd like to see is, I'd really like to see this fail, come down, take out the 1.5046. We become oversold intra-week and we stair step this prior high. See how we make highs? We attempt a new low, we fail, and then it breaks out. So if we pull back and we take out the 1.50462, I'm going to be looking next week at a 1 or 2 day reversal to the upside, dropping down to lower time frames, looking for those reversal patterns. If for whatever reason, as unexpected as it is, if we end up breaching this and coming all the way down, and again, usually you need some kind of catalyst, but if we breach this and we come down to the 1.4943, this is the second place. I'll be looking for a 1 or 2 day reversal because we become extremely oversold intra-week at that point. And the third thing is, if it starts to trade back down towards its lower bound, but instead of testing it, you get the break back above the moving average, you can look for that intra-week breakout and kind of bull flag setup into the 1.5252, which is a great profit taking target for next week. Next is euro dollar. Now, of course, we had that 50 basis point surprise cut. I'm looking for this to feed through into some weakness into the dollar this week. What I'd like to see is, I'd like to see this week the euro breaching its moving average and taking out the 1.1079. Also, if it takes out this low, that would be fantastic because this would be a nice support level just below. So we turn oversold intra-week below the 1.1079 and then we hit support. And there's another kind of broken resistance possibly turning support here. So if we breach this, take out this level, this is where I'll start to look for a 1 or 2 day reversal to the upside in euro dollar. If for whatever reason, I'd be very surprised if it did this, but if it does come all the way down and take out the 1.0994, this would be the second place, whether I'm long here and managing a losing position or whether this is an initial position, which would be great. This would be the second place I'd be looking for a 1 or 2 day reversal to the upside. And of course, you can look for it to start to trade towards its lower bound. This means it's correcting intra-week. And then instead of taking out the lower bound, it breaches it. You get momentum to the upside, the moving average follows, and you get that kind of bull flag set up into the upper bound at the 1.1247. But I cannot sell this market next week. I can only be a buyer of euro dollar next week. And the final euro pair here is euro New Zealand. Now, I do much prefer US dollar shorts and Canadian dollar shorts to New Zealand dollar shorts next week. And especially those pound dollar, pound CAD opportunities, EuroCAD, euro dollar opportunities. But as a third place after CAD shorts and US dollar shorts, it is the New Zealand dollar. So what I'd be looking for is if we can trade down and breach the 1.7712, we become oversold intra-week, maybe even take out the prior low. I would be looking for momentum to slow on lower time frames and then for the 1 or 2 day reversal to the upside. If for whatever reason we were to break this and trade all the way down to the 1.7526, even though this is unexpected, if we do trade through this on the very outside chance, this would be the second place. I'll be looking for a 1 or 2 day reversal because we become extremely oversold intra-week. And the third thing you can look for is if we start to trade back below it, and there's a very good chance this happens next week in Euro New Zealand, we fail to take out the lower bound, instead break back above the moving average. You can look for that kind of bull flag opportunity into the moving average and then the rally into the upper bound at the 1.8083 where you become overbought intra-week above this level. So it's a great profit taking opportunity. Okay, so finishing off the Forex markets with the Aussie dollar pairs, we have an RBA interest rate decision on Tuesday. I'm going to be trading these after the interest rate decision, and I'm going to be trading them in line with the same framework we've been looking at, and I'll show you how. What I want to see is this market consolidate, as they almost always do, into the interest rate decision, and then I'm going to be looking for a couple of things. If we get a kind of neutral interest rate decision, in other words, they hold interest rates and therefore everything comes out as expected, there's no surprises, it's essentially the same as not having an interest rate decision at all. So if that happens, I will be looking for this market Tuesday, maybe even Wednesday, to come down, take out the 0.91536. Once we breach this, we become oversold intra-week, especially if they hold rates and we get this turning oversold. That's going to be a great setup for a 1 or 2 day reversal to the upside in Aussie CAD next week. The second thing I'm going to be looking for is if we get, so not a neutral outcome, but we get a very bearish outcome from the Australian dollar. So what would that be? An unexpected rate cut. I still can't sell this market next week, but that would very likely push the Australian dollar down towards its second lower bound, because you get that catalyst then. You know, usually a major catalyst is required, not a small one, a big one, like an interest rate decision or CPI. If that happens, then below the 0.9070, we become extremely oversold intra-week. This would be the second place. I'll be looking for a 1 or 2 day reversal. And if we get a surprise cut, I probably won't step in and buy this from its low bound. I'll leave it. So it pushes through here, and then you get that initial opportunity from the second lower bound. You can look at that as well. And the third thing is, if you get a hawkish response, in other words, they come out, they hold interest rates, and they say, we're going to hold interest rates higher for longer than previously expected, and this is bullish for the Australian dollar. You can look for that consolidation, and then you get the immediate momentum from the interest rate decision. It pulls back, tucks into its moving average, and you get the follow-through bull flag into the 0.93204. I'm going to be looking at all of the Australian dollar pairs next week in the same format as this. So next is Aussie dollar. We get a kind of neutral outcome. What I'm going to be looking for is nothing has really happened, so therefore I'm going to look at a standard setup. We turn oversold intra-week below the 0.6724. This is going to be a great place to look for a 1 or 2 day reversal to the upside as we become oversold intra-week. If for whatever reason, you know, we get a very bearish outcome for the Aussie, I can still only be a buyer this week. So if it blasts all the way down to its 0.6643 bound, this is the second place I'd be looking for a 1 or 2 day reversal to the upside on a very bearish outcome for the Australian dollar. And if they hold rates, and again, they talk about holding rates for longer than expected or whatever happens, if it comes out and we see a bullish reaction from the Australian dollar and we get a bullish catalyst from the interest rate decision, you can look for that breakout. You get the initial momentum, it kind of pulls back and settles into its moving average, and then you get the follow through into the 0.6888. And finally, Aussie New Zealand. Now I prefer the other two Aussie pairs, but Aussie New Zealand is also on my watch list. So if we get a neutral outcome, I will be looking for this to kind of make its way down to the lower bound at the 1.0824. This would be the place to look for a 1 or 2 day reversal, start to look for those reversal patterns for momentum to slow. I'm going to be looking for a 1 or 2 day reversal to the upside. If for whatever reason we get a bearish outcome from the interest rate decision and Aussie New Zealand blasts all the way down to the 1.07380, it turns extremely oversold intra-week. This would be the second place you could look for a 1 or 2 day reversal next week. And the third thing, of course, if you start to just consolidate, as is likely, and then you get a bullish outcome for the Aussie, you see that blast higher, and then it kind of settles, usually the following day, and then you get that bull flag opportunity, in this case, into the 1.0997. Wrapping up the video then with gold and silver, 50 basis point surprise cut out the Federal Reserve this week. What should we be doing with gold and silver? Really, we should only be looking to be long or do nothing gold and silver this week. So I'd like to see gold come down, turn oversold intra-week at the 2572.01. So we breach this, we enter the buy zone, we turn oversold intra-week. I would be looking for a 1 or 2 day reversal to the upside in gold. If we break all the way through here and take out the 2521.75, which is very unlikely to happen, you would need a major bearish catalyst for gold for this to happen. But if something develops and that takes place, this will be the second place. Whether I'm long or not, I'd be looking for either an initial position or a second position for a 1 or 2 day reversal to the upside. And the other thing you can look for, of course, you see the market pulling into its moving average. You can look for the market to pull into its moving average and start to breach back above it, and you get that kind of breakout, because that gives you a correction, and then it gives you a breakout of the correction. The moving average comes up and you can kind of tuck into it. It's usually your first move into to 2672.52. And finally, we have silver. I can either be a buyer or do nothing, as I've already said. If this market comes down, takes out the 29.86 and takes out this prior low, that's going to be a great opportunity to start to look for this to find support and look for momentum to slow for a 1 or 2 day reversal to the upside. If we break through here and take out the 28.55, whether I'm long already or not, this would be the second place. I'll be looking for a 1 or 2 day reversal to the upside because we've become extremely oversold intra-week. Again, you would need some kind of major bearish catalyst. If it does that, emergency situation, I'd be looking to cost average this from the 28.55. And the third thing, of course, you start to get that correction intra-week in a market that you're looking to be bullish. It breaks out, so you're correcting, making your way down, and then you get the correction breakout. That's what's happening. Back above the moving average, kind of consolidates into it, and then you get that rally into the 32.47. Great profit taking opportunity for any intra-week silver longs next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting edge hedge trading app used in today's video by heading over to www.hedge-.com. Access to the cutting edge hedge platform is included with every GMT membership.